your market report for Friday, February 9th, 2018. Okay, as we start the markets this morning, the Dow Jones just started up just a few minutes ago, and I'll tell you what's happening. We're going to start the charts right here. Now, we went up suddenly when the Dow Jones first started up. It started up with a bang this morning. It's like, bam, right in there. 200 points up, just like boom, And so, but here's the thing. She's meandering along. All that enthusiasm of the startup this morning. But I don't know. I mean, this is such a shaky market, She could close down, really, honestly. Because even though it started with a bang, heck, it could, the way it's been lately, it could be down before I finish this show. Really, honestly. So we're going to keep our eye on it, and we're going to move on and talk about other things in the show, and then we'll come back to it. We're at 205 points up right now. Anyway, bonds and rates, and this is what's driving the market right here. So we're going to focus on this, on the bonds and rates, especially the 10-year. Now, here's the thing. U.S. Treasury bond, U.S. 10-year, 2.85%, and it's up today, but it's been progressing. Let's take a look at the 5-day, and we get a little bit better picture here. Okay, so click on the 5-day for the U.S. 10-year to give us a little bit better picture of what it's doing. And we see during the biggest part of the crash, knocked it down for a little bit, but we see it went up to a certain level. And this was looking bad. I was watching this when it went up to the peak here, and then we had a little bit more of a crash. And now what we've had, it's leveling off, but I have a feeling it's going to start creeping up pretty soon again. And so as long as it stays like this, leveled off like this, the market's going to try to level off too. And that's what we see happening today. We see a 200-point gain in the market, but the market's trying to level off. So I don't think it's going to be an appreciated, as long as this bond rates here stay like they are, fairly leveled off at around 2.85%, I don't see an appreciable loss or gain in the market today. It's going to be kind of like a little bit of a ho-hum day as long as these bonds stay ho-hum. So the market, you can see how it's interconnected to this U.S. 10-year bond rate. I mean, this is what caused the market crash, and of course we know what's going to happen with this in the future. Even though things are a little bit calm right now for today, we know what's going to happen to this in the future. In the next little while, this is going to creep up. This is going to creep up to 3%, 3.15, and then 3.25. And this is what it's going to do. And they're going to increase the rate that the Fed is pumping this up. The Fed is pumping this up. They're causing this, and they're going to increase it. This is their plan. So now if we take a look at the Dow Jones real quick, down 187. We're keeping our eye on it right now. It's at 187 right now. 187.08 right now. Okay. Let's open the chart up again, and we're going to take a look at crude oil. Sweet light crude oil right now, $60.24. We see it's really down. It's almost down into the $59 range for sweet light crude. The price is quite a little drop. It was almost up to $70 there a couple weeks ago. And I mean, this is dropping, this price. Bitcoin. Bitcoin at Bitstamp right now is doing rather well. Really, considering it was down to $5,920 there at Bitstamp not long ago, and right now it's at $83.99, and it's holding pretty good. But you got to understand, if we get a big stock market crash, and the fear comes, this could really get hurt. Cryptocurrency could really get hurt because it's a speculative market. Now we're going to take a look at the dollar, the U.S. dollar index, 90.35 right now. And that's pretty much steady for what it's been lately. It's been running around 89, 90. So 90.35 right now, and up slightly today. Now, cryptocurrency market capitalizations. Bitcoin. is at 84.66 according to this, and we got quite a few green numbers here. That means that the prices is going up. $153 for Litecoin. Bitcoin Cash, $12.90. Ripple is at 92 cents. Ripple is going up fast, almost getting ready to crack a buck. Ethereum, 853 bucks. Everything's going up pretty good right this morning. Here's Dash, another one of my favorites, at $614. I think Dash is a really nice coin. Anyway, silver price today. It's just sick. I don't even want to go here. This is like, it's just been hurting so bad lately. They've kept it smashed down so good lately. They've been really working at this. Now that the stock market is rolling over, they're really working hard to keep gold and silver down and suppressed. I don't know how many paper contracts they're having to create to do this, but it must be one heck of a lot. They've probably got like 1,000 to 1, 1,000 paper contracts for every actual ounce of actual physical silver that's in existence. They probably, I'm just guessing at that, I mean. But they probably have 1,000 paper contracts. And what do you think's going to happen when those 1,000 people all are chasing after that one real ounce of silver? Look at the price. Look how low it is. It's down 14 cents on the day, $16.25. Can you believe that they could actually suppress it this low? I think the all-in mining production cost is somewhere around $14. And sure, you do get these mines out there that say, okay, we mine silver for X amount, like $8, you know? But what they're not telling you is that's the price it costs them to bring the ore out of the ground. That's not even the cost of smelting it to the pure 999 product. That's just the cost it costs to get the ore out of the ground and get it into the first stage of smelting, which is just basically a bar that's got a lot of impurities in it. And then they weigh the bar. And it's like $8 an ounce to get it to that stage of production. Well, you don't buy silver that way. When you buy silver in an eagle, it's not in a bar with a lot of impurities in it that needs to be re-smelted down into a finer, it has to go to another factory again. And then they're not counting in the cost of exploration for new mines and stuff like that. They're not counting in any of these extra costs. As soon as they start putting all these extra costs in, that $8 cost, first thing you know, it goes up to 10 and then 12. And that might be one of your cheaper mines at $8, and then it goes up to 12. And the next thing you know, the real cost is actually $12. You know, but they give you this cost so that they can say, well, we got room, you know, but really they don't have room. The actual real truth of the matter is the cost is actually probably $14 on average for most of these mines. Some of the mines are probably getting it for 11 or 12, but I mean they're getting it as a byproduct off of things like copper and zinc, you know, and nickel and things like that they mine out of the ground, you know. And so the copper is more of not the copper, but the silver is more of a byproduct of these other base metals. And so there is a lot of mines like that, and their costs are actually hard for them to figure, and oftentimes they'll fudge those costs a little bit because it's a byproduct. You know, and they'll say like $7 or $8. They have their own axe to grind, and some of these people are probably being paid off by the bankers to say that the cost of production is cheaper so that they can keep people from buying silver. There's a whole group of them out there that don't want you to buy silver. They want to keep you away from it, you know. But the real cost of production is in around probably $14. And so they don't have a lot of room at $16.25 spot price. I mean, just think, if you had a factory and you were producing a product and your cost was $14 and you were only getting $16.25, how much room do you have there to maneuver? You know? And you got a lot of machinery and things that could break down. Like, say, an excavator breaks on you next week and it's going to cost you $250,000 to replace it. Suddenly, you got cost overruns. That's going to really hit you hard right in the pocketbook. So anyway, moving on. We've talked about the cryptocurrency. We've actually covered everything this morning so far, except for bonds. No, we've covered bonds earlier. Sorry. But this is the driver of the market. Maybe we could talk about this just for a second. This is going to go up, and this is going to continue crashing the market, but not right away. This is a problem that's not going to go away unless the Fed fixes it. This bond problem. And they don't plan on fixing it. This is going to get worse. If we don't have the crash now, we're going to have it after April. Because that's when they're going to increase this from 20 to 30. And that'll bring the crash. And if that don't work, 3 months later, they're going to increase it to 40. And if that don't work, 3 months later, they're going to increase it to 50. They're going to bring the system down. This is it. This year, the system's coming down. Unless the Fed relents. And they're not going to relent until the system comes down. So, I mean, this is just a catch-22 about this whole thing. So, listen, thank you guys for listening to this report on the financial markets. And we will catch you later. Bye-bye.